Problem number 10. The following are the balance sheet of H and S Limited as at 31st March 2018. Equity share capital consists of equity share capital. It is 5 lakh and changed. It is first is 5 lakh. Next one is 2 lakh. Next one is 2 lakh. Please change it. 2 lakh. Share capital of rupees 100 each. 12% preference share capital is there in this problem. 12% preference share capitals are there. Reserves and surplus are there. General reserve. So that date alone, please scratch out in this problem. Date, please scratch out. So because while editing, so in Excel we copied this and all. So date is please scratch out. So it is nothing but general reserve. This is closing balance. Closing balance. As on 31st March, closing balance, not opening. Profit and loss account 150 and 90. Current liabilities and projects consist of creditors and income tax liabilities are there. Assets consist of fixed assets, that is goodwill 60/40, machinery 1 lakh and 60, vehicles 180 and 70, furniture 50,000 and 30,000. Shares in S Limited at cost. So at cost they have given 3,80,000 nil. Current assets consist of stock 70 and 140. Debtors 1 lakh and 65,000. Bank balance 40 and 25,000. Finally, small balance sheet tallied. The following further information is are furnished. H Limited acquired 1,200 equity shares and 400 preference shares. So here two types of investments are there in subsidiary. 400 preference shares on 1/4/2017. So therefore, beginning of the year itself, at a cost of 2,80,000 is equity shares and 1 lakh is a preference shares. So therefore, total how much? 2 lakh plus 1 lakh, 3,80,000. So that's what they have given in a balance sheet also. 3,80,000 is your total cost of investment. So that means there is no outside investments. On account of consolidation, both will get nullified. The profit and loss account of S Limited had a credit balance of 30,000 as on 1/4/2017, and that of general reserve on that date was 50,000. So opening on 1/4/2017 on the date of acquisition, general reserve was 50,000 was there. So closing 60,000. That balance is closing is 60,000. So that's why I have scratched out, because here in this problem, so they have given, they have spoke about general reserve also. So that means there that while printing it was a mistake was there. Yeah. So opening 50,000 was there, closing 60 was there. Let us see. Now on 1st July 2017, we acquired in April. Now it is on 1st July 2017, S Limited declared a dividend out of its pre-acquisition profit. That means it's a P&L profit at 12% on its share capital. H Limited credited the receipt of dividend to its profit and loss account. Therefore, here in this problem, pre-acquisition dividend wrongly credited to P&L adjustment is there. That we have to do it. Next, on 1st December, so already July is a pre-acquisition dividend. In December 2017, S Limited issued. Yeah. So on 1st December 2017, S Limited issued 1 equity share for every 3 shares held as bonus shares. So on 1st December, so there is a bonus issue also at a face value of rupees 100 each per share out of its general reserve. So that means bonus issue, suppose if we are issuing, means it should be out of accumulated profits. That means out of general reserve they have issued. Opening balance 50 was there, minus bonus issue. So we have to check what's the balance. And closing balance in a finally net balance in a general reserve as on 31st March 2018 is 60,000 is there. No entry was made in the books of H Limited. No entry was made in the books of H Limited for receipt of bonus issue. For receipt of bonus issue, no entry was made. Yeah. So S Limited showed that means the share capital might have including bonus issue. That means here whatever the 2 lakh is given, this is inclusive of bonus issue. Got it?
Yes, sir.
Including bonus. So adjustment from general reserve is now they would have reduced that and all correct in subsidiary book. Subsidiary book what they reduced is correct, but H Limited they have not updated the number of shares what they have received. Got it? Yeah. Now, so yeah, continue reading. H Limited, no, holding company has not recorded anything for the receipt of bonus shares. S Limited owed 20,000 for purchase of stock from H Limited. The entire stock it is owed. Owed means outstanding. So that means a DRCR.
Yes, sir.
DRCR debtor creditor is there, as well as the entire stock is held by S Limited on 31st March 2018. H Limited made a profit of 25% on cost. Therefore, sale price is 125. So stock reserve is 20,000 into 25 divided by 125. You will get 4,000 is a stock reserve. Yeah. So that's it. Prepare consolidation. Prepare consolidation. That's it. Come to solution. Come to solution. Yeah. Question number 10.
Yeah.
Page number 28.
Yes, sir.
So, question number 10, page number 28, solution. Question number 10, page number 28, solution. So, first is to start with working notes. Working notes. To start with, step number 1, date of control. Date of control is 1/4. No, when it was acquired?
1,470.
1/4/17. No? No.
Sir, yes, sir.
Wait. 1/4. 1/4/2017. Okay. Next, step 2, shareholding pattern. Shareholding pattern.
Including bonus.
Yeah, including bonus. Including bonus. So first is H Limited. H Limited. So I will change in a question that names H Limited amount is there. So here change this into H Limited and S Limited. H Limited and S Limited. Yeah, H Limited, which is 2000. Sorry, how many first shares we had? 1,200.
Yes, sir.
Total number of shares are 2,000 shares. Out of that, bonus issue is how much they have given. One for bonus shares at a face value. One equity share for every 3 held. So that means, look out. This 2,000 share is 3 plus 1, correct?
Yes, sir.
This bonus shares is how much? It is 3 plus 1. 3 plus 1, 4 share. So that means before that we had only this is bonus shares is equal to 2000 into 1 by 4, which is 500 shares into
Yes, sir.
1200 or into 1 by 2 by or into 1200 divided by 1500, which is how many shares? 400 shares, sir.
Yes, sir.
400 shares. So which is bonus issue is 400 shares. Therefore total it is 1600 shares out of 2000 shares, which amounts to 80%.
Yes, sir.
Non-controlling interest, it is 20%. Total 100%. Total 100%. Yeah. So please try to understand this computation. So here the story is subsidiary has already recorded. Only holding company H Limited has not recognized the bonus shares. Got it?
Yes, sir.
So after the adjustment, subsidiary would have been sent its financial statement, and that we are consolidating. But in that, bonus has been declared, but H Limited in 1200 shares, what they said in that they have not included bonus shares. That's the meaning. So that means out of that, it is including bonus, it is a 2000 shares. That is a 2 lakh divided by 10 rupees, you will get 100 rupees, you will get 2000 shares. So 2000 shares are there. Out of that, 500 is a bonus shares. Sir, how 500 bonus share? Bonus has been declared, one for every 3 held. That means if 3 were there, 1 would have been bonus. Therefore, including bonus, after bonus, it should be 3 plus 1, including bonus, 4 shares will be there. Yeah. So therefore 2000 is including bonus, means out of that 1 by 4 is bonus issue. Therefore I have deducted, I have computed that 1 by 4, you got 500 shares. So 500 shares is a bonus issue, means 2000 minus 500, 1500 was the previously held shares. Out of 1500, 1200 shares are held by H Limited, means it is a 60%. Because of bonus issue, percentage of holding will not change, only number we have to value. Got it? 1200 divided by
Sir,
1500 is 80%. Yes.
sir, 5 lakh is the share capital, no?
That is holding company where you are in.
Um, okay, sir, okay.
Step number 3, analysis of profits of subsidiary. Profits of
Subsidiary.
subsidiary. Profits of subsidiary, yes, limited. Now, first analysis is Pramod, always general reserve.
Yes, sir.
General reserve. So general reserve, how much was given as per balance sheet? It is 60,000. We have scratched out that date, therefore this is the closing balance, because the information related to how much was opening balance they have given in adjustment. Got it?
Yes, sir.
Yeah. So now, what was the on the date of acquisition? That is a pre 1/4/17. It was 50,000. 50,000, and closing balance is 10,000.
Yes, sir.
Yeah, you should not write like that. Less bonus issue. Plus how much? Bonus issue 2 lakh into 1 by 4, which is 50,000. Therefore, balance is nil. So, therefore, completely this is post acquisition or current year. Completely 60,000 is current year. This is revenue reserve. This is capital profit. Got it? Yeah. So opening balance 50,000 was there.
Yes,
Out
sir.
of that, they have declared the bonus issue during the period. So therefore, if they have declared the bonus, means that opening balance would have been utilized or not.
Yes, sir.
Yeah. So since they have utilized the opening balance 50,000, that is a our 2 lakh is including bonus. So therefore, if 1,50,000 was the capital, on that 1 by 3, 50,000 would have been bonus. Including bonus, it is a 1 by 4. Got it?
Yes, sir.
3 plus 1. Yeah. Next. Question number adjustment B. So do you have any revaluation relating to asset here? No,
Okay.
I don't think so. Revaluation is not there. So therefore, directly we can go for P&L account adjustment, profit and loss account. Profit and loss account. Profit and loss account balance, how much was given on the date? Closing balance is 90,000.
Yes, sir.
Yes, sir.
90,000 out of this on 1/4/17 and current year. This is pre, this is post. So total that day how much was there in P&L? It was 30,000 was there.
Yes,
Yes,
sir.
sir.
30,000 was there. So balance is closing is current year.
Yes, sir.
Yeah, you should not say so, Pramod, because there is a pre-acquisition dividend declared at 12%. Adjustment number 3.
Yes.
Yes, sir.
Dividend was declared. So dividend was declared. Pre-acquisition dividend means it is out of opening profits for the previous year. It has been declared. So therefore, so here less dividend declared or dividend paid. So first, whenever you touch equity shares, Pramod, if preference shares are there, they will come and stand first or no.
Yes, sir.
So therefore,
Yes,
first
sir.
is preference dividend. Thereafter only equity dividend. Are you understanding?
Yes, sir.
Yes, sir.
So 50,000 into 12%, which amounts to 6,000.
Yes, sir.
Equity dividend. Equity dividend. Then capital. How much was there?
5 lakh.
1,50,000. Array, update that into 2 lakh, yaar.
Okay. Yes, sir.
1,50,000 into 12%. Into 12%. So therefore, this amounts to 18,000. Yeah. So here itself I have updated and shown, right?
Yes, sir.
18. So therefore, the balance is 6,000 is there. Balance is 6,000 is there. So therefore, out of 90,000, 6,000 is a opening balance, means after utilization of opening reserves for paying the previous year dividend. Balance how much what's there was 84,000 is my post acquisition profit, which we call it as revenue profit, and this is what we call it as capital profit. So in this problem, preference shares is the new entry. Step number 4, apportionment. To start with, capital profit, revenue reserve, and revenue profit. To start with, first analysis was general reserve. We have analyzed general reserve. Opening capital profit was nil. Revenue reserve was 60,000. Profit and loss account. Profit and loss account. Which is opening balance was just 6,000, and revenue profit is 84,000. So total 6,000, 60,000, 84,000 less share of non-controlling interest at 20%, which amounts to 1,200, 12,000, and
16,800.
16.
16,800.
Yes, sir.
16,800. Therefore, so what is the share of
4800.
H Limited?
What?
4,800, 48,000 and 67,200.
Yes, sir.
Okay, so now this will go to step number 5. This will go to step number 6, cost of control. This 2 will go to step number 8, reserve for CPS. Next, let's go to step number 5, non-controlling interest at 20%. Non-controlling interest at 20%. So now, first is non-controlling interest in equity shareholders. So first is share in equity share capital. Share in equity share capital. So including bonus, which is including bonus, it is 2 lakh
2 lakh
into
20.
20%, which amounts to 40,000. Which amounts to 40,000. Then capital profit. Capital profit. Capital profit 1,200.
Yes, sir.
Revenue profit
1200. 1200.
12,000. Revenue reserve
Revenue reserve.
6,800.
Sir, revenue reserve 12,000.
Okay. So revenue reserve is
12,000.
12,000.
okay. Let it. So revenue reserve, revenue profit. Revenue profit. Yeah. Now, so
70.
this amounts to 70,000.
Yes, sir.
70,000. So for this, my dear friends, you have to look out here. Do you have any unrealized profit? Unrealized profit. Check out.
Yes.
Adjustment number 5 shows that S
4,000.
Limited owed 20,000 for purchase of stock. So that means debtor creditor is 20,000 is there. S Limited owed. That means H Limited, S Limited. So S Limited has to pay means who would have supplied the goods?
H
H
Limited.
Limited supplied.
Downstream.
So therefore it is downstream.
Yes, sir.
So downstream. So therefore URP will not come in step number 5. So it is only step number 7. Total computation and adjustment is step number 8. Only holding company has to bear. Got it?
Yes, sir.
Yeah. URP. So if you want, you can write it less URP nil, because URP is nil. It is downstream. What stream?
Downstream.
Good morning.
Downstream. So thereafter, my dear friend, so here new adjustment is add preference share capital. Preference share capital, that to whom? Outsiders. That to whom? Outsiders. Now, sir, what is outsiders here? Preference share capital, check out how much was there.
50.
50,000. Yeah, 50,000, or shall I say 500 shares?
Yes, sir.
Minus 400 held by H Limited. Yeah. So therefore, what is outsiders held? 100 shares. 100 shares into rupees 100, you will get 10,000 rupees.
Yes, sir.
10,000 rupees is outsiders. Sir, what about 400? In step number 6, we are going to cancel. Got it? Cost of control we will value. In that, goodwill or capital reserve we will evaluate, and this will be cancelled. So therefore, so including preference shares, how much is total for CBS? 80,000. Are you understanding new story?
Yes, sir.
Yeah. So next, let us go to the step number 6. Step 6. Step number 6, which is called as cost of control.
Liability method.
Correct. Liability route. So first is A, investment in what?
Equity shares.
Investment in equity. Yeah. So investment in equity. So here only goodwill or capital reserve what we compare. So here what we have here only Ind AS 110 valuation will apply. For this investment in equity, what's the valuation will apply?
Ind AS
110.
110.
Suppose if it's a preference shares or debentures, so here Ind AS 110 valuation will not apply. There Ind AS 109 valuation will apply. Got it? Just you have to compare with cost and fair value. The difference, since it is on consolidation, we have to call it as a goodwill or capital reserve on cancellation. Yeah. If it is like a sale derecognition, I would have called that as a profit or loss. Got it?
Yes, sir.
Yeah. No. So here, let's go. So first is what is cost of investment?
280.
Yeah. Cost of investment, which is 2,80,000. For that, less pre-acquisition dividend,
Yes.
less pre-acquisition dividend wrongly credited to P&L. So how much was pre-acquisition dividend? Yeah. So it is, I believe, 18,000 into 80%. I'm in equity investment. I'm in equity investment. Yeah. Therefore, which amounts to 14,400.
Yes, sir.
Yeah. 14,400. Therefore, next. Yeah. What's net cost of investment?
265, 600.
2,
65.
600. 265, 600. Yeah. So 265. Next, less share of net assets. Share of net assets. So here, what is share in equity capital? Share in equity share capital, including bonus,
2 lakh.
2 lakh into 80%, which is 1,60,000.
Yes, sir.
1,60,000. Capital profit, as per step number 4,
4,800.
4,800. So in total, 1,64,800. Therefore, goodwill,
1 lakh 800.
so goodwill 1,08,000. 1,08,000. Next, B. Next, B. Investment in
Pre- uh, Preference share.
preference shares. Now, to start with, so cost of investment. So 400 shares. Amount is 1 lakh. 1 lakh less face value less face value of shares. It is 400 into rupees 100, which is 40,000. Therefore, balance 60,000 is called as goodwill.
Sir, there is no concept of
Pre-acquisition dividend is not there. Yeah, write the
yes.
note. Write the note. Preference shareholders are not eligible for share in reserves and surplus. Therefore, no concept of pre-acquisition dividend. Yeah,
Yes.
so no concept of pre-acquisition dividend nor dividend. Look out only if company, since they are declaring, they will come and stand. Correct?
Yes, sir.
Yeah. So if company went into loss or whatever it might be, the preference shareholders does not have the right in reserves and surplus. Got it? Yeah. So therefore, out of accumulated profit, suppose if I declare, that means whether they will declare or not. So nobody knows that. So therefore, out of reserves and surplus, preference shareholders does not have the right. If since they have declared, so they are getting, that's it. Clear? Adjustment about preference dividend adjustment is already over. Yeah, so that is look out my dear friends. On preference shares, if you have invested, your the moment if it is invested, it is a return. That's all your expectation. Got it?
Yes, sir.
No share of resource and surplus or company's profit or loss. This and all is not your concern. So therefore, here there is no concept of pre-acquisition dividend in case of preference shares. Got it?
Yes, sir.
Yes, sir.
Yeah. So yes, those who have the doubt. Yeah. So here, no concept. Only for equity investment, there is all pre-acquisition dividend, etc., etc. Those things and all will come. Yeah. So let me take up the doubts of the students for a while, if it is there. So step number
Seven.
7. Step number 7, intercompany owings.
Oh,
Step number 7, intercompany owings. So first one is debtor creditor. Debtor creditor. So debtor creditor. So total debtor as per balance sheet. Total debtor, total creditor. Total debtor, total creditor. So now balance as per balance sheet. Balance as per
260.
balance sheet. Both debtors are 2,65,000. Total creditors as
One
per
third.
balance sheet is 1,30,000. So less mutual owings. Mutual owings commonly 20,000. 20,000. It has been given in adjustment number 5. S Limited owed for purchase of stock from H Limited 20,000. Owed, that means it is a outstanding balance. That's the meaning. So therefore, balance to CBS, which is 2,45,000 and 1,10,000. Next, so BRBP, nothing is there. Intercompany borrowings, nothing is there. Therefore, unrealized profit. unrealized profit. So which is 20,000 entirely is in a stock into 25 divided by 125, which is 4,000. 4,000. So since it is a downstream, so it is completely step
Holding
number
company.
8. Step number 8, holding company. Let's go. Step number 8. Step number 8, reserves for
CBS.
CBS. So here especially revenue reserves what we talk about. So first is general reserve, profit and loss account. To start with, so H limited balance, as per balance sheet, H limited general reserve is 1 lakh closing balance, and P and L what we have 1 lakh 50,000. So now share from S limited,
Subsidy.
share from S limited, which is a subsidiary, which is share from
48.
subsidiary, revenue reserve 48,000.
Yes, sir.
Yeah. Revenue profit
67,200.
67 200. 67 200. So this is over. Now further, if any errors or adjustments are there, that we have to do with. So now here we have pre-acquisition dividend wrongly credited to P&L, which is 14,400, and unrealized profit, which is 4,000 URP. Yeah, that's it. On dividend on preference shares, it is no concept of pre-acquisition dividend. Got it?
Yes.
Yeah. So because for shareholders, they don't have any concept what we call as pre-acquisition. Suppose if the company has not paid 3 years preference dividend, got it? So you sold after 3 years, so you didn't get the dividend alone, so therefore you sold to someone. In 1 month, company has declared dividend for the equity shares, so therefore preference shares also will get that too, since unless otherwise specified, all preference shares, all accumulated preference shares are,
Yes, sir.
yeah, all are nature is cumulative preference shares, correct? So that time, so you got all 3 years put together in one shot. Clear?
Yes, sir.
So that doesn't mean that it's a pre-acquisition, because there was no concept of dividend. Clear?
Yes, sir.
So therefore, that you have to treat it as like revenue profit only, and you have to credit to P&L. Only on equity shares, it is a pre-acquisition dividend is there, because share from previous owner, that is a share of previous owner's profit in a company you are receiving. Got it? That's the meaning. Yeah. So preference shareholders are not owners. That's how. So therefore, total for CPS 48
1 lakh 48.
1,48,000
1
and
lakh
1,98,800. Yeah. So this is steps. Now let us go to required solution. Required solution. Consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st March 2018. To start with, so proceed with the format. First is assets. In assets, note and amount. To start with, first is non-current asset. Under non-current asset, which one is the first one?
PP.
Non-current asset. So here, in relating to non-current asset, no schedule is there. Sorry, no adjustments are given. So therefore, you can take it. Property, plant and equipment. So total property, plant and we have machinery split is there. Split is there.
Yes, sir.
Split is there. Let's go and give the split in note number 1. Then intangible asset. Intangible asset hyphen goodwill. Goodwill you can give here. Goodwill how much? 60,000 plus 40,000 plus 1,08,000 plus 60,000 plus 60,000. Do you remember how this came?
Yes, sir.
Yeah. So therefore it is 1 lakh. So therefore total 2,60,800.
Yes, sir.
So 2,60,800. So next, do you have any investments, non-current investments? Nothing. It has been cancelled. Then let's go to number 2, current assets. Under current assets, first is inventory. Inventory. So we have the stock reserve adjustment. So therefore we have to give in note number 2. So thereafter financial
Assets.
assets. Under financial assets, debtors, that is trade
Trade
receivables. Trade receivables. So we have to take. So we don't have a bills receivable, my dear friends. Sorry. Therefore, you can take from step number 7 directly. Step number 7 directly. Debtors how much? 2,45,000.
Sir.
2,45,000. You can take it directly. So then bank balance. Bank balance. So you can take total 65,000 directly. No notice required. So then we have called total. Then equity and liability. In equity and liability, so to start with, number 1, first is shareholders fund. Shareholders fund. Under that, share capital. So always holding company share capital 5 lakh, but in exam you have to give that note which I have said. Opening balance changes during the year nil, closing balance. So then we have my dear friends, 1 minute. Let's go and give share capital is note number 3. Here preference share capital also there, my dear friends. Preference share capital is there, so therefore 6 lakh will come. Equity share capital plus preference share capital, 6 lakh will come. 6 lakh will come. So let us give the note. So thereafter other equity, note number 4. Then non-controlling interest. Non-controlling interest Step number 5, 80,000.
80.
Then, so do you have any other long-term borrowings? No.
No, sir.
No. Then let's go to current liability. Current liability. Under current liability, so we have financial, no. So first is other liability is income tax. Income tax, both the company put together, 1,30,000.
Yes, sir.
Then financial liability. Financial liability. So creditors. So step number 7. Creditors, how much is there? 1,10,000. 1,10,000. 1,10,000. That's it. Now let's go to notes. Note 1. Note 1, PPE.
PP.
Note 1, property, plant and equipment. Property, plant and equipment, which amounts to, first to start with machinery. Machinery in total 1 lakh plus 60,000. 1 lakh plus 60,000 total 1,60,000. Vehicle 1,80,000 plus 70,000 2,50,000. Furniture 50,000 plus 30,000 in total 80,000. So shares in S Limited, that's over. So that's it in total. So 4,90,000.
Yes, sir.
Total 4,90,000. Commit update 4,90,000. So then note 2 is inventory. Note 2 is inventory. In inventory, first is H Limited. H Limited inventory 70,000. S Limited inventory 1,40,000. In total 2,10,000 less unrealized profit 4,000. So therefore 2,06,000. 2,06,000. 2,06,000. Next, note number 3, share capital. Share capital. So in that equity share capital, equity share capital, equity share capital, how much it is? 2 lakh, equity share capital is
1 lakh. 5
5
lakh.
5 lakh. Equity share capital 5 lakh. So here holding company equity share capital 5 lakh. So which is 100 rupee means it is 5,000 shares.
Yes, sir.
5,000 shares of rupees 100 each, fully paid up. Fully paid up. So we don't know whether these are issued for consideration other than cash or not. So therefore I'm ignoring that. Next, preference. 12% preference share capital. It is 1 lakh. Therefore in total, so that this is also how many shares? 1,000 shares of rupees 100 each, fully paid. Next, note number 4, other equity. Other equity. So the format is particulars, share application, money, other equity component, capital reserve, retained earnings, other reserve total. Yeah. So here take it from general reserve. So this is from both are from step number 8, profit and loss account. So can you get the figure from general reserve? General reserve 1,48,000. General reserve 1,48,000 and P&L is 1,98,800. So therefore total 1,98,800 plus 48,000. So in total
3,46,800.
3,46,800.
Sir,
3,46,800.
it
Yeah. So that's it. 3,46,800.
12,66,800 total. And
12,60,800.
6,800.
12,66,800. That is balance sheet total. Yeah. So this is problem number 10.